Good morning, and thank you for attending today's webinar. Before we get our start on this webinar on a short and cold week in many places, I want to address the appreciation for those that are on the line who have submitted business with us and partnered with IAMS throughout the years, as well as SecureCare, who's been a great partner of ours as well. And before we get into the material here on SecureCare and long-term care, I do want to also address those who may have just recently discovered IAMS, whether that be through our YouTube page and education videos or webinars, or a relationship with one of our internal marketers. And I'm going to go through a couple items here that will address information that you may not be aware of if you are new with us, and information that you may not be aware of if you're doing existing business with us here. So again, thank you for attending the webinar event here today. And so if you are new with us, I want to point out an incentive that we have, particularly important here as we approach the first quarter of 2022. Hard for me to believe. I don't know if anybody else is in the same boat, but the cliche is no more. Of course, the year's gone fast, and many of us know why. In preparation for next year, it can always help to get an injection into your business when it relates to capital to spend on marketing to further your message. And when you come on board new with IAMS, we understand that it's a trial period. We're getting to know you, you're getting to know us, you're getting to understand our systems and how we work with you, and essentially evaluation, which is very difficult to do without submitting your first application and going through that process. And we appreciate those that are doing that with us. And as you get to know our team and you submit your applications, we're going to incentivize you in the first 180 days of licensing with us with an incentive program that will put additional money back into your pocket based on production that you submit. So on the screen, we have just the base level of this program. If you have interest, definitely talk to your marketer or your primary business development director at IAMS. And we've got different levels. So in the first 180 days, $100,000 in annuity premium submitted, could land you an additional a postcard mailing as an example, an iPad, so cash would be another option. In addition to that, pre-formatted emails and a marketing analysis from top to bottom, and what we call your corporate identity package, so a branding package for you. That also would be, for those of you that are joining us writing life insurance in the hybrid products, it'd be $10,000 a target premium would be the relation there between annuities and life. In addition to that, we go further to $250,000 and all the way up to $1 million. I would say that these documents, we will send a document out to you if you have a question, and we can get this information over to you so you can take a look at it. The items on here are preset. However, we understand you may have a customized approach to the way that you generate new clients, and we can definitely make adjustments. Bottom line is we want to pay you for additional production coming in during that time period to get a really fast start with us. I appreciate your business. We want to do that going forward. So if you do have an interest in the new producer program, you're within your first 120 or 180 days with IAMS, please reach out to your consultative sales director, your first contact here at IAMS, and ask them for the new producer builder detail, and we can send this over to you and have an open discussion with what you may be looking to accomplish and how we can help you get there faster. In addition to that, we know that we're bringing on new people, and much like you in your practice, we would like to work with a core group of people that are like you, those of you that are writing with us now. So this applies to existing IAMS producers as well as new. And so what we're looking for here is a way to incentivize you for referring those individuals over to us. Just like when we hire new employees, often our best resources are those that are referred to us. And same thing goes for the producers. We're appreciative of your approach, the ones that we've partnered with and are about to, and we'd like to, if beneficial, meet some more of people like you in your network, and we'll pay you for it. The way this works is we'll pay you $50 cash when your referral, you send the referral name over to us. My team will contact them and get them all set up and taken care of. Once they license, we'll give you $50. Once they submit their first case and start writing, we're going to pay you thousands, as it says here, because there's no limit. Essentially, we're going to pay you basis points based on that individual person you referred's production, and we're not going to take it out of their pocket, and we're taking that out of ours. So Again, if you have interest in the program here, the producer referral program, or have someone that you think may be beneficial fit for us or could use some of the resources we've helped you with, we appreciate it. First and foremost. Second, talk to your primary relationship here at IMES, and we'll get you set up on this program to make sure you get compensated for that referral at the same time. As you do come on board with us, those that are new with us, coming on board with us here and going through who we are and having that first case be processed and getting an idea of how we work, you're going to meet our back office support team. And our goal here is to help you work smarter and not harder. Everything from leading industry case design assistance, everything from the simplest final expense case all the way up through the most detailed estate planning and premium finance cases as an example. And we can definitely help with that. Also, as it relates to doing business with us, you're going to meet our annuity case management team and our life case management team as you submit business through our process and work with them to get updates. Each member of those teams focuses on a core group of carriers so that they can better build a relationship with each carrier rather than handling all. And you'll be designed a case management team expert on any case that you submit and get to know them as well. So I know they're waiting to hear from you, and as are we, to go through that process. Contracting, we do have paperless contracting, so an easy process. If you do have an interest today, as an example, in licensing with SecureCare, and I know it's one of the questions we'll be asking here in a second, you'll get to experience that, essentially filling out paperless contracting once you're set up in our system. As many of you know, just a click away to add a new carrier is all we ask as we go forward. If you do have licensing that you'd like to submit or request, and you happen to be on our website, you can also do that there, as well as get annuity quotes as well as life insurance quotes. If you have any questions on that, please reach out to the life support team or the life sales team or annuity sales team. Once you do get ready to write an application, and speaking of our website, we do have two different platforms for submitting business paperless as well. In light of the pandemic, and many of our practices did change, this can be very beneficial. But in addition to that, it cuts down on any not in good order applications and frustration later versus what we used to see with the paper application. So if you have interest, you can log on to take an annuity application through Firelight. We are a provider through our website, and through IGO for life insurance as well on our site. With Firelight, ultimately we're looking at getting business submitted with 99% to 100% error-proof. Same thing with IGO, and we do have evidence and been some time here that shows cases do go pay quicker and faster, which means commission gets paid to you faster, client goes through less headache. More and more companies are coming on board with these. If you have a question about which app to use, Firelight or IGO, please reach out to your primary contact at IMES. Once you're on board with us, and those of you that are working with us, this may be something that you're aware of, maybe haven't dipped your toes into or asked us about just yet, or maybe this year is the first year after we've had kind of a couple years here of changes and new normal that you want to step out and help promote your practice. Maybe even on the concept of long-term care, as we'll be talking about here shortly. I just saw an article, I'm sure we'll put it out last night, that was talking about we had this whole issue with long-term care insurance and the states stepping in to support. There's some legislation out there and a committee being drawn to look at the in-force increased rates on traditional long-term care. As we start to see this type of media attention, which will ultimately go public, my guess is, pretty good guess here, that we're going to see more interest from our clients and the general public in the area of care while aging, which is going to bring us front and center into that. We have producers that have been doing that for a long time as far as promoting their practices, being able to offer risk assessments and risk mitigation as it relates to long-term care as part of your retirement plan. But we also have others that say, I haven't yet, but I'd like to. With all this attention, we'd like to ride the wave. If that's the case, we do have a fully owned, meaning they are employees of IMES, marketing and creative marketing team that do everything from the simplest business card, logo design, all the way up through the most advanced, industry leading as it relates to IMOs, digital solutions for marketing your business both through social media and also ongoing drip campaigns as it relates to email marketing. So if you have any questions on that, or if you'd like to talk with how we can support you better in that area or support you going into the new year, please talk to your primary relationship. Your consultative sales director is another word of saying marketers. Oftentimes we say marketer here at IMES. We take a consultative approach when it comes to your practice, and let's set up a time. Let's have a consultation, see what we can do to allocate our resources to help you. Once again, because this is an IMES-based program and the employees here that do the design work with us, it's unlike a regular advertising team locally where you may actually not own your own material. Here you own the material. Anything that we do for you is yours. We benefit when you do, which is the revenue that comes from the sales of product on the back end. So look forward to having a conversation with you, and definitely reach out if you have a question about creative marketing solutions and how IMES can help you into the new year. We've summed up a lot of the items that we can find on our website. I'd urge you, if you haven't yet, go ahead and register for IMES Inc. And if you have, take a look. On our website, we've made the website with actionable tools versus just an information or recruiting site, which oftentimes you'll see in our industry. You can do everything from quote term insurance all the way through get rates on annuities, take a look at current payouts on income benefit riders, look at long-term care insurance products, all the way to downloading forms, submitting contracting, pulling in-force forms. If you have a beneficiary change form and it's on the weekend and we're not available, that's something that you can access typically through our website as well. So if you have any questions on the website, reach out to your primary contact here. As it relates to the client understanding some of these solutions, we were just talking about media attention on long-term care. Oftentimes the great plans we put together are best displayed graphically. And we have programs and partnerships with individual companies like Retirement Analyzer, which is an excellent software for relaying to someone what their current retirement plan, what they feel, their thoughts, their assets, when they'd like to retire, that current plan they have in their head. The software will allow them to, through a questionnaire, get that information out of their head and do a stress test on it and take a look to see if the plan that they believe to be true will turn out to be true in retirement. And if so, or if not, when? When will it fail? When will it work? So that you can find out now versus waiting until later to work with your financial advisor on a solution. This is a simplistic approach to showing the income generation and retirement, testing your plan. In addition to that, I'd say on the life insurance side, we also partner with Stonewood, which is a program that does the same thing, but visually shows somebody, as an example, the benefits of tax offset when it relates to the difference between continuing to fund your qualified ERISA plan, tax qualified 401k or IRA, versus funding index universal life insurance, with the IRS, with IUL being one of the two ways to approved by the IRS to take tax-free income in the future, one being the Roth, the other one being cash value in life insurance. And the change that occurred this year, allowing clients to put more money, according to the IRS, into these products for retirement, that has become an interest of many. This program will print out in a simple 4-page report. It simply takes the illustration from the IUL and will show them the difference between what their taxable total income in retirement and annual or monthly check would be with funding their ERISA plan or qualified plan at work versus an IUL after the offset of taxes and no tax income. Another great resource, ask your life insurance director today if you have a question about being able to better help clients understand tax offset in retirement. For those of you on the line that have been thinking about integrating your practice into the wealth advisory world, whether you are looking to take your 65 or 66, or you have it already, whether you're had originally set up as an independent RIA and would like someone to help you become an IAR to help with the compliance portion of that and still continue your practice, or if you're just looking at taking your test and have an interest in bringing wealth management into your practice, we can help. We're looking for relationships at both existing and new folks with us. If you have an interest or just a simple question, or would like a call from our wealth management team, Duncan would be happy to reach out to you. Let your primary contact at IMS know again, and we will get a consultation set up with you or answer any questions that you may have. Now, at the end of a long year, and especially since it's cold here in the Midwest, I have to mention we're still in the running for our trip, our annual producer trip. We do a 18-month qualification period versus a 12, so we're still in the middle of qualification for that. We're going to be out in a cruise out in Rome, Sorrento, and many other places. Would be happy to have you join us if you have any questions about that. The qualification period started December 1st of 2020, and we'll be going through the end of June here in the coming year, 2022. If you have any questions about where you stand, where your number is, or how you can get on the board to see where you stand, where your number is, by all means, please ask your primary contact here at IMS, and we'll get you all squared away. We'd be happy to see you there and have you qualify for the trip as well. With COVID, we do have our annual trainings. We brought those back here this year with some of the changes with the carriers and the pandemic at the time. We're still working on lining these up. We've had a couple of the carriers, and we've done one of these events here, and as we go into the new year, we plan to have more. If you have an interest in a table-to-table or face-to-face education event where you're going to hear from other top producers, go through large case design as it relates to life insurance, business concepts, again, rub elbows with others doing what you do and hear detailed information and training about today's newest and hottest products and concepts and marketing and practice ideas. If you have an interest in that, let us know. Though we don't have a date set up now, as we begin to get dates, we'd like to get an idea of who would be interested and who raised their hand so we can get you a seat. So talk to your primary marketer or contact today. And for IMS, we are on Facebook, LinkedIn, YouTube. By all means, let us know if you have any questions. Take a look. This webinar here will be getting out a recorded copy of it in the next couple days. So without further ado, I'm going to switch it over here. John, can you hear me okay on the line?
Hello, Justin. Can you hear me?
Hey, yes, sir. Good morning. First and foremost, appreciate you doing this. So appreciate you partnering with us.
Absolutely, Justin.
Today. Yeah, as I shared with John.
Absolutely.
Yeah, go ahead. Yeah, I shared with I would share with the audience. We've been hearing more and more about SecureCare as it comes up, and your products and what you guys have been doing over there. I've been quoting more and more on the team here, so appreciate you attending to show us what's hot. Go ahead.
Well, thank you, and good morning, everybody. I'm John Thomas with SecureCare Financial. I'm one of our Midwest wholesalers and cover a territory that is Minnesota, Nebraska, Kansas, Missouri, Idaho, and all the way up through the Dakotas. So that's kind of my slice of world, and I've been with SecureCare for a couple of years. It was with another carrier before that for about a decade, wholesaling long-term care and life insurance products, really this hybrid long-term care product that I'm going to talk about today. So as I've shared with Justin and we've talked about this year, I think there's a monumental opportunity in this coming year to discuss long-term care planning with your clients. It's being in this industry for going on 15 years. Long-term care is always important, right? But as Justin mentioned, COVID has really accelerated the need and the opportunity for planning with many consumers. And so I'm going to talk through really a perspective, our perspective and my perspective on the opportunity and the need where we find ourselves in this post-COVID environment. We'd love to be a post-COVID environment, but things unfortunately keep coming back around, don't they? So I'll give you a little perspective on where we find ourselves in this COVID long-term care planning environment, and then the solution that we offer and where we fit in the market. But before I jump in there, a quick or brief on SecureCare Financial. If you're not familiar with SecureCare Financial, we are a Fortune 500 company. SecureCare Financial is the umbrella company of Minnesota Life Insurance. Maybe you've heard or familiar with Minnesota Life Insurance Company. It used to be called Minnesota Mutual. We are a mutually held company. And so Justin may have on the slide that shows our ratings. We are fantastically rated. This data shows as of December 2020, we actually just this month had our ratings affirmed. A+ with AM Best, AA with Fitch, AA- with Standard & Poor, and most importantly, a Comdex of 96 out of 100. That kind of Comdex really puts us in the top echelon or the top of insurance companies that get this kind of Comdex ranking. So we're thrilled to have those ratings affirmed. And really being a mutual company, what's important, or a mutually held company, what's important to know is that we're not publicly traded, right? That we are mutually held and have the opportunity to invest conservatively for long-term growth and long-term success. And so that we're not investing for market gains, we're not investing for short-term gains for our stock, but we have a long-term perspective, and we'll be around to deliver on the promises that our policies represent. Right, we've been around for 140 plus years, and we'll be around in the future. And so that's really just a quick on Minnesota Life, SecureCare Financial, and who we are. Now, Justin, I'll mention slide numbers. How about that? In slide 5, the conversation really starts on how we envision our retirement, right? I like to tell folks that there really are 2 phases of retirement. There's phase 1 and phase 2. And what we often think of and often plan for and consumers think of is that first phase of retirement, right? That we're working our entire lives to put money aside in qualified plans, maybe 401k, IRAs, 457s, what have you, right? And we envision creating income to retire and live this great life, to go travel and golf and spend time with loved ones. We don't often plan ahead of time for that phase 2 of retirement. Phase 2 is when we start to slow down, right? You hear the term quite a bit more now, aging in place, right? That we retire, we spend some good years, our golden years in retirement, and then we start to age and we start to slow down. And what the data shows is that as we age and we slow down, our income need doesn't decrease. As a matter of fact, it increases. And so in those later years, we need additional income. We have our cost of lifestyle. Those lifestyle costs don't decrease dramatically. And in addition to those lifestyle costs, we're going to pay more for, keeping up our home, maybe hiring folks to come help with things around the house as we age, right? We start to pay for more and more services, and then eventually, potentially we pay for care, right? And if we pay for care, that requires additional income. And so that latter half of retirement, or those aging years, we have to plan for additional income. And so the long-term care situation, we bring it up. We often think of nursing home or assisted living, but the solutions are far more creative, and the solutions now can create additional income to meet that income gap that we have later in life, where we're paying for care, our medical costs have increased, right? And so there is that need for additional income. I think we probably all understand the risk, right? That as we age, that there is a risk for long-term care. You've probably heard stats on long-term care that if you're over the age of 65, you have a 70% chance of needing some sort of long-term care service, right? Those stats are helpful, but they don't really capture the planning need, right? That there is a significant risk. Most of us think, yeah, that's great, but it's not going to happen to me, right? But the planning risk is there. There are a much higher probability that you'll need some sort of care than you utilize your home insurance, let's say, because of a critical situation in your home, like a fire or damage to your home that requires you to utilize home insurance. As Americans are living longer, the risk for chronic care or chronic illness increases as well. Medicine's advanced, our longevity is increasing. On the slide here, you may see that 5 million Americans are living with Alzheimer's currently. Over the past decade plus, that's increased by 70%. The incidences of Alzheimer's. Doctors are studying it. They don't know all the causes, but part of it is that folks are living longer. And so Alzheimer's is just one piece of that chronic illness that is increasing. And we're seeing those incidences increase. And I'm going to jump through a couple of slides here, Justin. If you take a look at slide 11,
Perfect.
We often think, great, thank you, and we often look at, what are the sources of help, right? Folks, and I'm sure many of you are familiar with this, but our consumers aren't always aware of what support is available, right? And the assumption is that government programs are going to provide that support. Right. If ultimately they don't have the income they need, they don't have the care that they need through family or other resources, that the government ultimately will support and provide that care. Right. And so through the two government programs, Medicare, Medicaid, right, you probably understand that Medicare is for the elderly, right? As we age, we get Medicare services. Those provide health insurance and other services. The assumption is that it also provides long-term care. What Medicare does provide is short-term rehabilitation after hospital stay, right? So if you envision someone that is elderly, maybe they fall and break a hip or injure themselves, right, and they need rehabilitative care, Medicare does provide those services for up to 20 days. Right, 20 days is what they provide to rehabilitate someone. If it's deemed that that person isn't going to be rehabilitated and they need long-term or elder care services, Medicare does not provide that sort of long-term care. So they have 20 days of rehabilitative care post-hospital. You can qualify for up to 100 days if you're on a track for rehabilitation, but after 20 days, there's a significant copay. So there is no coverage ultimately after 100 days. And so really is not long-term care or benefits for long-term care. It is rehabilitative care. Medicaid, on the other hand, as you are aware, it provides a benefit for those that are in need, right, that don't have assets. They've spent down all of their assets, or they didn't have significant retirement assets, and so they have need, right? They don't have assets. And so, Medicaid services could potentially provide care. Folks design plans to spin down assets or put assets in trust to try to qualify for Medicaid services. The truth of the matter is Medicaid often doesn't provide the services that we would envision for ourselves, right? The care at home and the comfort of our home that we might desire isn't often available through many states, through Medicaid. Most Medicaid services provide a Medicaid bed in a Medicaid facility. I've had family members that unfortunately have been in that situation, receive care at a nursing home in a Medicaid facility. And as we, envision care for ourselves and our clients, right, that's not the type of care most of us would envision. And so there is a better plan, right? And as we look at COVID, I'm going to jump to slide 14, Justin. As we look at COVID, and this is really where the opportunity is to have the conversation. I'll give you a quick story. I over the past 2+ years, I've had several family members that have gone into nursing homes, family members that have been in nursing homes, and I lost my grandfather and my uncle over these past 2 years during this COVID period. They were both in nursing homes and passed. And as we were at services, of course, if you've been to a funeral during this time, right, it's been challenging. Every family's come together. We've been masked up and keeping some distance, and so COVID provided some challenges, especially early on. My grandfather passed a couple of months in the COVID period, and so the conversation right, there was a lot of fear around nursing homes. COVID was going through nursing homes pretty quickly, and as you look at this chart, you see around that January 2021 period, the spike of COVID in nursing homes, right? And the conversation in my family around services was, how do we, as we age, how do we avoid the nursing home? How do we stay out of the nursing home? Because nobody wanted to be in a nursing home, right? As COVID was going through pretty rapidly, and folks that had the opportunity, they had family that could support them, pulled themselves out of nursing homes, right? Because of this substantial death and disease in the nursing homes. On the next slide, we see the occupancy. So, pre-COVID, nursing home occupancy was about 80%. It dipped at its lowest in first part of this year to about 65-ish%, and now is just over 70%. But we haven't seen, a return to that 80% level of occupancy in nursing homes. So there's still this COVID effect, right? That folks realize, and we're having a lot of conversations now on pandemics and endemics and disease, and how vulnerable that the nursing home population is. And so that is a reality that lives in all of our minds now. And as we're aging, and we have loved ones that are aging, the impetus to have a conversation that plan for care outside of a nursing home is far more important, and I think relevant as we go into 2022. On the next slide, the long-term care, the long-term effects of COVID are also something that has impacted all of us, right? We're reading stories of long COVID and what's potentially long-term damage of COVID. I just read a story that I believe it's in Arkansas, that they're finding these incidences of a black mold or black fungus in folks' lungs as a fallout or a after effect of COVID, and so something really scary that they're finding in folks that have these long COVID symptoms, right? But there's the Mayo Clinic is doing some fantastic research at long COVID and some of the effects that they're seeing even already, and envisioning what these effects are going to be long term, and they see that there's potential long term effects on the heart, right? That there's damage to the heart muscle caused by folks that even have mild symptoms of COVID. A long-term pneumonia that's often associated with COVID. Over the past 2 years, they're seeing this long COVID continues to affect folks' lungs, particularly scarring that occurs and damage to the air sacs is causing a long-term damage to the lungs, and even some brain challenges. And so we're all, learning about this and seeing these stories, and so consumers are aware, particularly those that have contracted COVID, of potentially the damage to their organs, damage to their body, and effects this may have that it will pop back up later in life. And so the reason to plan for long-term care and plan for elder care, I think, is more pressing. As we look at changes in care in slide 18, Justin, one thing that I mentioned, chronic illness and care is increasing. There's a great study through AARP that came out in 2020 that looked at the changes in caregiving and care. And they highlighted 2015 versus 2020, so over that 5-year span. And over that 5-year span, there was an increase in folks that needed care for over 5 years. If you look at that chart there, you'll see a 30% increase from 2015 to 2020 in the incidences of folks that needed care for longer than 5 years. And so that caused them to increase the average duration of care. What was in 2015, it was 4 years. They've increased it to 4.5 years as the national average duration of elder care, because of that increase in folks that needed care for longer than 5 years. And so that really bears out this increase in longevity, but also increase in chronic illness. Out of that same study, on the next slide, you'll see that there was in that survey, they asked a pretty significant question, and they asked it of folks that were providing care or caregivers and also those receiving care, the recipients of care. And they asked, before this caregiving situation or before you needed care, did you have a plan for your own future care, such as handling financial matters, healthcare decisions, or living arrangements? And out of those that were receiving care, in that middle column of that chart, you see that almost 40% of folks said no, they did not have a plan for future care. Even more so, 54% of their loved ones providing care or acting as caregivers did not have a plan or conversation for their loved ones that are now receiving care or they're providing that care. And so that kind of bears out this reality that elder care is not something that folks talk about, they or want to talk about. By and large, about half of folks are not discussing the reality of elder care with their families or what their plans are. And so this is really where the crucial need is, as we have, longevity and Alzheimer's and particularly this baby boom generation entering this period, right, of retirement and post-retirement or that phase 2 that I mentioned, right? If we're not having conversations, the importance of us as financial planners and agents and advisors to introduce this to our consumers, to our clients, right? To make sure that at the least they're having conversations with their loved ones about what their plan is. So it may include an insurance solution like I'll present on in just a minute. It may include, a plan for their other retirement assets and how they're going to spend them down. But at the least, it needs to include a conversation on where that individual wants to live, what their plan is for care. Are they open to a transition to assisted living or a nursing home? Most folks, if it's their preference, want to stay home as long as possible, right? And how can we create the plan that's going to allow for that individual to stay home as long as possible? And so introducing this concept in the conversation and pressing and pushing our clients to have that conversation with their loved ones is important in this planning. It really the third, I think, spoke in what creates this momentum in going into 2022, and that's really increased long-term care sales this year, and we project will considerably increase long-term care insurance sales in the next year. It is the public response or state response, and this has really been led by Washington State. On slide 22, Justin, I have a brief spiel on Washington State, but many of you are probably aware the state of Washington passed a state program, a government program that provides benefits for Washington State residents. Along with a limited long-term care benefit, it also has a mandatory tax. For anyone working in the state of Washington, there is a payroll tax of what initially is 0.58%, uncapped on all W-9 earnings, or W-2 earnings. And so for anyone in Washington State, this program is rolling out this year, 2022. And so for any of you that followed this, there was a opt-out deadline this year that if you bought private long-term care insurance by November 1st of 2021, you could opt out of that payroll tax. And so it led to this huge increase of folks applying for and purchasing long-term care insurance. We saw an enormous increase in folks in the state of Washington buying insurance, and other carriers did as well. I know in the first couple of weeks of this opt-out period after the 1st of November, the state of Washington saw a couple 100,000 applications to opt out. Folks saying they applied and bought long-term care insurance are now applying to opt out of the tax that's going to begin in 2022. But what's interesting about this is we didn't just see an increase in the state of Washington. That really had a ripple effect. Other states are talking about this sort of solution. Other states are talking about adopting a similar plan. My state of Minnesota is one of the states leading that conversation. They have made comments that they are serious about introducing similar legislation in the coming year, in the coming legislative year. And so Minnesota may be next in the states that will introduce a similar public long-term care plan. Other states like California and Philadelphia and there are a number of 7 or 8 states that have made similar comments that they're interested in a public plan. And so that has increased in consumers' minds the need for long-term care planning, the awareness that it's important, and the burden that it's put on state governments, right? Because for folks that don't have their own funds in place, their own assets to pay for care, they don't have a long-term care insurance plan, and they do rely on Medicaid. Those nursing home costs, those elder care costs have become huge burdens to state Medicaid plans. And so this really does allow for a shift from Medicaid, state Medicaid, to this new program in the state of Washington, which is alleviating the state's Medicaid plan some. And so that kind of reality, I think, is important to make our folks aware of, our consumers and clients aware of. But also this state plan, if you look at the details, it's $36,000 of lifetime benefits, $36,500. It's not an enormous plan. It's really for the state and for the state to offload some of their burden to a new tax plan. And so if the state realizes that this is a burden, right, let's put a plan in place for our folks that is far more beneficial, that's going to provide more robust benefits, and not something as limited as this type of plan. So that really, I think, is permeating the social conscious. There are employers throughout the state of Washington that have impact across the nation that have been forced to look at rolling out a plan across their employer base. And so that's also made quite a bit of awareness as you talk to small businesses and larger employers that do business or based in the state of Washington. That's created quite a bit of awareness across their employer base. So there's opportunities there as well. And in just a moment, I'm going to talk a little bit about the solution that we offer. But the final slide here, Justin, on 23. This is from a study through what's called the Insurance Barometer study. It was done in 2020 through LIMRA, a partnership between LIMRA and Life Happens. Life Happens is the nonprofit life insurance organization that does a lot of research and puts out information on life insurance, but also they've included in the last several years long-term care. And something that's phenomenal that came out of this study is the need gap identified in long-term care planning. And you see in that table, long-term care planning 2019, 2020. In 2019 and 2020, there was a dramatic increase in what they identified as a need gap. So a need gap is folks that indicated that they don't have long-term care insurance, but have a need for it. And so that need gap of 43% of folks that said they don't have this insurance, long-term care or elder insurance, but need it, right? And they said that represents in 2020 about 110 million consumers. So an active market demand of 110 million consumers at some level said, they don't have long-term care insurance and think they need it. And so there's a huge opportunity to have this conversation. I think it really is driven by all these things, right? The baby boomers entering retirement, COVID and COVID effects, and this move was started by Washington State as this new first public type of long-term care plan has been introduced. And so at SecureCare, our solution, the asset-based long-term care planning approach, and Justin, you can jump to slide 25. It really is a solution that's based on a repositioning of assets. And so you may be familiar with traditional long-term care. Traditional long-term care has been around for 50 plus years. It's very much like, homeowners insurance or auto insurance, right? You pay a monthly premium, and that premium provides a benefit. That benefit will pay you if you have loss, right? In this case, if you have long-term care expenses, you'll get a benefit to cover those long-term care expenses. In the past decade or so, there's been a hybrid solution, or what's also called an asset-based solution, that is a blend of life insurance and long-term care insurance. It's actually a long-term care benefit that's built on a life insurance chassis. And it was designed to address a couple of things. And the first is one of the challenges of traditional long-term care insurance is that if I buy this insurance, and it can be somewhat costly, right? If I buy it and then I pass away, I don't get anything for it, or my family doesn't get anything from that benefit. It only pays if I do have elder care expenses, right? And so having a long-term care solution that's built on a life insurance chassis will provide a death benefit for someone that passes away but doesn't use the long-term care. And so it was built to address that issue. It's also an asset that we can include within our consumer or client's portfolio that in most cases, and with SecureCare, provides a sense of or a bit of liquidity. For our solution, there's a vesting period of 5 years, and then after 5 years, if you cancel it, you can get 100% of your premium back. And so it has a level of liquidity. And so those are really the two primary differences between traditional long-term care, is that it has a death benefit, and then it has a level of cash value or liquidity. And so different from a traditional long-term care insurance product, this asset-based approach looks at or says, let's look at our client's portfolio, their assets, right, their retirement assets, and let's reposition some of their assets into this solution that's going to provide protection for long-term care. So in the slide here, you see a sample portfolio. Let's say someone that has, 401k, they have home, car, maybe a rental home, liquid assets, life insurance, right? And I'll use a scenario of let's say Sally. Well, Sally has worked for state government her entire life. She's entering her retirement years. Maybe she's in her early 60s, and she has $600,000 set aside in qualified assets. Right, that $600,000 is going to provide a level of income for her in her retirement years. Right, and if we don't have any plan in place for long-term care, or we don't have a long-term care product or solution, insurance product, we've allocated her retirement assets to pay for that care when it's needed. Right, that $600,000 that's going to create income. We're also relying on that income as she ages to also cover her care costs and maybe increase medical costs that she has down the road. So instead of allocating her entire retirement portfolio, let's take a portion of what she has. Maybe she has some sitting in CDs or in a money market. It's liquid, it's cash. Let's take a portion of what she has in cash and reposition it into this other investment that provides this hedge of protection for long-term care expenses. Maybe she's got an extra $200,000 saved away in savings, money market, CDs. Maybe we take $75,000 or $100,000 of that and reposition it into this other solution. And the solution with SecureCare, it is called SecureCare. There are several other carriers in the market that provide solutions. There are 4 or 5 other carriers that provide competitive solutions that are similar to the SecureCare product. But the way that ours is structured, it's built on a universal life chassis. That universal life chassis provides a death benefit, and then attached to that is a long-term care policy. It's called in the product, it's called extension of long-term care benefits, but it's basically a small life insurance policy with an attached long-term care policy that create this package of benefits. And so on this slide, you see $100,000. Let's say we did take $100,000 of what Sally had sitting in her fixed assets. and we reallocated it to SecureCare, it's going to buy this base life insurance policy. That base life insurance policy, if she doesn't end up needing care and passes away, provides a death benefit. If she does need care, when she files a claim with Securian and starts to receive this income to provide for her care, it's going to exhaust this death benefit. It would take 2 years, in most cases, 2 years to exhaust the death benefit. After 2 years, we're going to pay out of the attached long-term care policy. In this example, it's a 6-year policy. There's 6 years worth of benefits. So the base policy, their life insurance, would be exhausted in 2 years. And then over another 4 years, we'd pay out of the attached long-term care policy. The benefits that are shown, this is a hypothetical, I should say hypothetical. It is an example on a 62-year-old female. So a 62-year-old female investing $100,000 with a 3% compound inflation. So we can add inflation to allow those long-term care benefits to grow. By her age 80, we'd have $500,000 or $534,000 of long-term care benefits that pay out on a monthly basis of $6,882. So that give you a sense of what those benefits might look like. And on the next slide, we have some coverage options. And this really does a fantastic job of showing what kind of options there are within SecureCare, but also the value proposition. So the question you often get as you're talking with folks about this type of solution is, that sounds great, but why go through the hassle of writing an insurance policy? Why wouldn't I just keep that money invested, right? Well, if you look at the coverage options, so we offer a single pay through a 15-year pay. And so each of these shows, just for the pricing sense, $100,000 of total premium, a one-time pay, the single pay through $20,000 over 5 years, or $10,000 a year for 10 years, up through $6,667 over 15 years. Right, and on each of these, we're assuming a 60-year-old female in this example. Our 3% rider, it shows either no inflation added, and with no inflation, you have a level benefit. That level benefit is a little bit higher than what the inflation option starts off with day one. But over time, you see at age 85, in that blue column, at age 85, those benefits would grow substantially, so that, in a single pay example, by age 85, that 6-year-old female would have $693,000 of LTC benefits. The column to the right of that, if she were to pass away before needing long-term care, the death benefit might be a return of premium, what she invested. So it's really not a substantial life insurance policy, but it does at least return back to her portfolio for her family what was invested. So there's not a loss of investment. But that final column, the tax equivalent yield, what that demonstrates is what someone would have to earn in a taxable investment to create the same kind of leverage. So for each of these, single pay through 15 pay, the tax equivalent yield, and it assumes a 24% marginal tax rate. Someone would have to earn 9.5 to 10% to equate to this same type of benefit in the solution. And so, of course, someone could earn, 9, 10% in the market, right? But as a guaranteed insurance policy, that every aspect of the policy is guaranteed, whether the long-term care benefit, the death benefit, the inflation growth, those are all guaranteed. And so, you could out-earn this in the market, but certainly not on a guaranteed basis, right? So why not take a portion of our assets, reallocate it into a guaranteed solution that provides fantastic leverage for elder care expenses, right? And once we've really protected against that risk, we can imagine our other investments, our other assets differently. Maybe we can invest them a little more aggressively, or look at some alternative investments because we know these elder care expenses have been planned for well. And so that's really the value proposition with this solution. Justin, I'll highlight the next couple of slides, and then I'll pause for questions before we close. But I mentioned the all aspects of the solution are guaranteed. And so the next slides show the four guarantees, really the four guarantees of the solution. That the long-term care benefit is guaranteed, the death benefit is guaranteed, the return of premium is on a 5-year vested schedule, and so in the the year one return of premium is 80%. So in that initial year, if you were to cancel it after buying, and of course there's a cancellation period that you can get all your money back within 30 days. But after that, if you cancel the policy, there's an 80% return of premium. That increases by 4% each year, and then after 5 years, you cancel it, you get 100% of your money back. We also do have the multi-pay options, the 5, 7, 10, and 15-year payment options. The contract is built so that no matter what happens, it's guaranteed not to lapse. And so accordingly, we do have a reduced paid up benefit that's contractually built into the policy. If you run an illustration, you'll see it in the illustration that if you run a 10-year payment, it's going to give you a table that in any year that you cancel the policy, there's a guaranteed benefit. And so let's say you go 5 years into paying the premium and you stop paying premium, something changes, let's say you're a small business owner, something changes in your income, you can't continue to pay the premium, or as an individual, you decide to stop paying premium, right? You will have a reduced paid up benefit that is almost proportionate to what you've paid in. And if you've paid 5 out of 10 years of premium, you'll have a benefit that's proportionately about 50% of your original benefit. And so that really creates an opportunity that even in the longer pay periods, if something happens in the funding, it is a guaranteed solution that will provide a guaranteed benefit that is reduced accordingly. That reduced benefit does also continue to inflate. So for someone that has the inflation added or that inflation option, that benefit will continue to inflate. So Justin, we're about up on the hour. I do want to pause there and open it up for questions.
Oh, that's great. And as you're sending those in, thank you very much, John. Right on with everything going through. I'm going to go ahead and pose some polling questions for us here. You'll see on your screen as I pose these or put these out there, give you a little bit of time to answer and respond to those as well. If you would, it'll help us on follow-up as we get back with you to allocate your needs, get you what you need. And then I'd also say, too, with the format, any questions you have directly for John or myself or just in general, by all means, talk to your primary contact here at IAMS or contact me or email me at justin@imsinc.com. We'll be getting out to you material that'll have John's contact information on it as well as SecureCare. So feel free if you have any questions to go from there as well. So first polling question of the day, I'm going to go ahead and launch here. And the first one is, are you interested in licensing with SecureCare? Would you like us to go ahead and send over to you a link for insurance-paid digital licensing to get set up with them so that you can explore their products more? Great company to have in your pocket as a long-term care designer. That is definitely one we would recommend. And so I'll give you a little bit longer here to go through that, and we should be good getting everybody set up there. We're good. I'm going to close that poll. Thank you. Second one is, would you have interest in getting access to our most recent updated long-term care insurance awareness and sales kit? If you have interest, or if you don't know if you have the newest one, by all means, let us know. Inside this kit, the kit was designed by paying attention to industry leaders like John and his team, myself, our team here at IAMS, and what we see on the street as well, and most importantly, from you, producers in the field that have opted already. Maybe they've already integrated long-term care as a way to identify a very important risk part of your retirement. And what is it that they're doing to get their name out there and capture attention? These resources are items that they say are a must-have. We've put them together inside our kit, as well as designed others that help you integrate long-term care into your practice. I request that today, and we can do a consultation with you as well. So thank you very much for that. And the final polling question here, and you may have already been, I've already been thinking through myself. If you have anybody that you would like a design run on for the security product, a case that you're working on right now, or if you normally sell a competitor and you want to see the differences, by all means, let us know. Tony, myself, Beth, Curtis will reach out to you, and we'll get you all set up with a design and walk through the concept, get you the material and run a quote for you, illustration and proposal. So thank you very much for your attendance. And John, as always, thank you for your time today.
Thank you, Justin, and appreciate you working with my technical challenges. I hope we weren't too discombobulated.
No, that worked perfect. I've been there before, and at least it wasn't live. But no, you did great, and thank you. I think we got everything up there. And have a happy holiday. And if anybody has any questions, let us know. Thanks again, John, and we'll be talking to you soon. Have a good day.
Thank you. You too.
Thanks, sir.